you and answer your questions live. And let's begin. Today on the show, I have with me Nisreen Mamaji, CFP, Moneyworks Financial Services. Nisreen, hi, good evening, and welcome to the show. Nisreen, I think let's begin with Ramya's question. I don't know if Ramya is on the phone line with me, but I have a question. The current portfolio that she sent us, the details include a few funds. She has UTI Nifty, she has DSP Nifty Next 50, Edelweiss Flexi Cap, Motilal Oswal Mid Cap, Tata Small Cap, Motilal Oswal S&P US Equity, and Motilal Oswal Multi Cap also. Current value is 2.5 lakhs, and she wants to invest for almost 17 years, and the amount that she is looking at accumulating is almost around 3 CR. She'll be doing a step up also, and she wants to know if she can add a large cap or a large and mid cap, to achieve her goal and to give steady returns. Nisreen.
Of about 3 crore, you can add HDFC
Sure.
Balance Advantage Fund, SIP of about 2,000 rupees. Also, it will give, create some risk cushioning for you. So as of now, your future value after 20 years is about 2.5 crore, on the total SIP that you're doing of 23,000. So you're advised to increase that to about 25,000 and also to do a step up by 10% in order to achieve 3 crores, because as of now, 23,000 will get you about 2.5 crores if you calculate at about 12% compounded annualized growth rate. Now, also, we'd like to structure your portfolio a little differently because you have too many funds. So based on that, what you can do is you can invest in the UTI Nifty 50, which is an index fund about 5,500 rupees. DSP Nifty Next 50 about 4,000 rupees. Edelweiss Flexi Cap 4,000 rupees. Motilal Oswal Mid Cap 3,000 rupees, and Tata Small Cap 2,000 rupees. Also, your Motilal Oswal S&P US Equity Fund, you can increase it by 500 rupees, so you can make the total about 2,500 rupees. And your Motilal Oswal Multi Cap, you can increase by 500 to make it 3,000 rupees. And as I mentioned earlier, the HDFC Balance Advantage Fund, 3,000 rupees. So that's a new fund that has been added. So if you calculate at 27,000 SIP without any step up, then after 20 years, you will be getting about 3 crores approximately. So that is at 12% compounded annualized growth rate. So make sure that, you're reviewing your portfolio regularly. You can continue with this SIP of 27,000. And I've already mentioned the figures earlier. All these funds are creating a very good basket of investments for you. Some of them are index funds. You have flexi cap, you have small cap, mid cap, and multi cap. So, you have a very well-rounded portfolio. And, all the very best. Make sure that you are on track by reviewing regularly. All the best.
Okay, so these are the changes for Ramya. Let's take Bhargavi's question, and she says that she is 32 and she started investing in mutual funds almost a year back and wants to invest for almost 15 to 20 years and wants to accumulate 15 CR for her retirement. She'll be stepping up her SIP by 10%. The funds that she has in her portfolio are White Oak Multi-Asset Allocation Fund, Motilal Oswal Small Cap and Multi Cap, Invesco Large and Mid Cap. She wants to add one more small cap or a factor fund and wants to distribute the current allocation of 15,000, 7,500 each. That's the allocation that she's decided. And she wants to know whether this strategy will reduce the risk associated with small cap. Okay, very interesting question. But do we really need to add this kind of a fund in order to reduce the risk involved in a small cap? Or, Nisreen, if I'm invested for, say, 7 to 10 years, the risk automatically, gets mitigated in a small cap category specifically?
Well, that's a very interesting question. Definitely. So if your term is that long, for a small cap fund, what we desire is that the small cap, the discovery of the price happens and it becomes either a mid cap or a large cap. And whilst doing so, the NAV will go up because, obviously certain stocks will meet the target and they will go from a small cap to a mid cap to a large cap. And while doing so, there will be a price discovery and the entire small cap fund will reflect that in the higher NAV. Now, typically we say that for a small cap fund to realize its value, it takes about, at least 7 years upwards. Now, since you have already devoted that much time into your portfolio, you're giving, at least 10 to 15 years for the portfolio to grow and in fact, additional. So therefore, you need not worry too much on the risk that a small cap portfolio will give you. And you will definitely, mitigate the risk, but also add the value. And an SIP investor, in fact, is very well poised to do that because you will be buying in the corrections as well as when the market is up. So you will be slowly collecting your units and taking advantage of rupee cost averaging that we say, because you will, when the market is corrected, you will be buying more units. Okay, so you're completely on track. You can definitely, allocate more towards the small caps and mid caps in your portfolio because of the term that you are mentioning. You're only 32 years old and you have a long year, 20 plus years for retirement. So that said, I'll continue to the rest of your query. So basically, after 20 years, currently, when you're investing about 1 lakh rupees in your SIPs, you'll be close to about 9.9 crores. But after 19 years, if you step up every year with a 10% step up in your SIP, you will be close to about 1.5 crores after 19 years. And in fact, that's what your expectation is. And, if you continue for even a little additional time, you'll be close to about 19 crores. So your expected amount is about 15 crores. So I think you should be able to continue your SIPs. Anyway, your time frame is about 19 to 20 years, but you're expected to do a 10% step up so that, you are completely on track. Now, as far as the structured portfolio goes, I'd just like to mention a few points. You can invest in the White Oak Multi-Asset Allocation Fund for about 25,000 rupees. Invesco Large and Mid Cap about 30,000 rupees. Motilal Oswal Multi-Cap Fund for 30,000 rupees. Motilal Small Cap 15,000 rupees. Bandhan Small Cap 7,500. Quant Small Cap 7,500. So totally we're suggesting that, you increase your SIP to 1,15,000. Maybe if not this year, you can continue your step up SIP and do that in the next couple of years. So by doing so, you will be close to, after 18 years and the 10% step up, you'll be close to your target of about 15 crores. In fact, it will be a little over. Now, since the, portfolio is very well structured and does a very good job of mitigating the entire risk, you also have the various asset classes and the various categories. So you can, you don't have to be exposed so much in the small cap. You can also, increase the flexi cap. But as I mentioned earlier, since your time frame is longer, both are okay. Ultimately, there's, mean price, mean revision. And after 15, 20 years, even if you ignore the capitalizations, most of the funds will give you, similar kind of returns. So make sure that you're reviewing your portfolio regularly and you are on track. All the very best, Ramya. Good to see that you're 32 and you're planning your retirement strategies from now.
Okay.
All the very best.
Totally. So that was the recommendation on Bhargavi's investment. Let's take Mr. Sanjay Vedu's question, and he wants to know if it's the right time to invest in Motilal Oswal 100 Nasdaq 100 ETF, and which is better, Nasdaq 100 or Hang Seng for investors with moderate appetite. Okay, I just hope that you are looking at international investments for diversification and not a part of your core portfolio. So if that is the case, Nisreen, what should be the theme that one should be following, or both kinds can be included in the portfolio, but depending on your time frame or at maybe different time intervals?
Definitely, Kavita, that you have kind of mentioned very clearly what you should be looking at. But I'll answer his query first, and then we'll get down to the rationale. So when he's talking about the Nasdaq 100 ETF, basically these are the top 100 non-financial US tech-heavy stocks. Like Apple, Microsoft, Nvidia, Amazon. We're all familiar with these names. The recent performance, as of mid 2025, 2025, there's been a very strong recovery and growth driven by AI, tech, and semiconductors. So the 5-year CAGR of these kind of funds, which is the compounded annualized growth rate, is between 17 to 20% in INR terms. So therefore, in the Nasdaq 100 ETF, the concentration risk is very heavy towards tech funds. The currency risk is also there because we all know that in the last 5 years the US dollar has appreciated and our INR has depreciated, and we are also obviously sensitive to the US Fed interest rate changes even going forwards. But what is good about this fund is basically it has an excellent long-term growth. You will have exposure to global innovation leaders, and it's also like a dollar hedge because you're investing in an international fund in dollars. So also in terms of if you're planning to buy something or send a child for education to the US, it's always good to also have a hedge in your in your hedging currency in your portfolio. Now, as far as the Hang Seng goes, basically the underlying index is the top 50 companies in the Hong Kong Stock Exchange, which is very heavy on financials, real estate, and Chinese tech like Alibaba and Tencent. The recent performance as of 2025 is that the global peers have been lagging, but there's been a slight recovery due to Chinese stimulus. The 5-year CAGR is, only between 2 to 6%. It's a very muted return for the Hang Seng index. So obviously the risk will be a geopolitical risk, which we are all aware of, where China is concerned, the regulatory overhang in China, the weak domestic consumption, the tariff situation. But what is good is that, you are getting a very low valuation with the Hang Seng because it is muted right now. There's a possibility of a high dividend yield, and obviously there's diversification from the US markets. So it's a good time to invest in the Motilal Oswal Nasdaq 100 ETF. If you're investing with, say, a 3 to 5 year horizon, you want global diversification and you're looking at a higher growth potential. You also have to be okay with short-term volatility and the currency risk. You have to keep all this in mind. The Hang Seng can be considered only as a tactical allocation, say 5 to 10% of the portfolio, if you believe in the China recovery story. But it's less aligned with a moderate risk profile, aiming for steady returns. So if you feel that your risk profile is slightly moderate and you're looking at steady returns, then you can avoid this altogether. But having said that, you can combine both of these. But as a tactical allocation, it should be lower in your portfolio. Both of them, the Nasdaq 100 ETF as well as the Hang Seng, even to a lesser extent. So I hope the query is answered.
Move on and let's take Srinivasan's question. I have with me Nisreen Mamaji, who is doing live financial planning of our viewers today. Nisreen, so Srinivasan has sent this question from Chennai. He said that he's 31 years old and investing in mutual fund since last 2.5 years. He's got only 5 funds: Tata India Innovation, JM Flexi Cap, Access Small Cap, Kotak Emerging Equity, ICICI Pru, Nifty 50 Index, and he wants to achieve 1 CR in next 15 years. And for that, he wants to know if the structure of his portfolio is good, or are there any kind of changes that he would recommend.
Sure. So, Srinivas, what you can do is you can continue the iPro Nifty 50 Index Fund for 6,000 rupees, Kotak Emerging Equity Fund 4,000 rupees. Instead of Access Small Cap, I recommend Bandhan Small Cap, and the increase should be by 500 rupees, so 4,500 rupees. Instead of JM Flexi Cap, I would recommend Parak Parik Flexi Cap, and you increase it by 1,500 rupees, so make that SIP of 4,500 for the Flexi Cap category. And your Tata India Innovation Fund, you can continue for 1,000 rupees. So what we're recommending is that at 18,000 rupees, after 15 years, at 12% compounded annualized growth rate, you will have about, less than 1 crore in your portfolio. You'll have 90 lakhs. But if you want to continue after 13 years, the same amount of SIP, which is 18,000 rupees, for 13 years with a 10% step up, then yes, you will meet your target corpus of 1 crore, provided that the expected compounded annualized growth rate is met for the entire period of 20 years. So, also the other option is that you can increase your SIP to 20,000 rupees, as I mentioned earlier. And, in that case, after 15 years, you will also meet your, expected target corpus without any kind of step up. So I've given you a choice of continuing your SIP with step up for 15 years and without step up, or with step up for 13 years and without step up for 15 years. So these are the two combinations. The funds also, I have mentioned to you how you should be making a change to 20,000 rupees. So just increase by 2,000 rupees. Do the step up if it suits you. If it doesn't, increase the tenure. So all the very best, and make sure that you change the funds as I mentioned earlier. Access to Bandhan Small Cap and JM Flexi to Parak Parik Flexi. All the very best.
Okay, I think with that, it's a wrap on the show as well. Thank you so much, Nisreen, for being on the show and helping our viewers with their financial portfolio queries today. And for all our viewers who just want to know our WhatsApp number and email ID where you can send across your portfolio details, let's note it down, 867 865 the WhatsApp number, the money show at etnow.tv. So you can send across your portfolio details and our experts will do your live financial planning on the show. Let's move on and let's talk about our very special initiative. The beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. To encourage this habit, SBI Mutual Fund in collaboration with Times Network is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. As part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. All right, next up, Abu Dhabi witnesses the 7th annual Culture Summit themed Culture for Humanity and Beyond. The event took place from April 27 to 29th and brought together stakeholders from over 90 countries to discuss the power of culture in a rapidly evolving world and the impact of AI on creativity. Take a look